Hey guys, welcome back to our channel. First of all, I want to wish you a happy Holi today. And in this video, we'll be discussing position sizing. Now, what I'll be doing, I'll be taking you to a PPT, which me and Nikita made. And there I'll tell you like what I learned on my journey in my trading, okay, when it comes to position sizing from different mentors of mine. And also let's learn, okay, some concepts that we can learn. Particularly, it's important in today's scenario because currently it's very hard to make like money trading relative to what it was in 2022 especially. Okay, so let's get started. Now I'm taking you to the PPT. So first, before we start, okay, like to know the concepts, which ones are important. First, let's discuss what is position sizing. Basically, this tool or this thing, this concept is going to tell you like how many number of lots you're going to trade or how many contracts are you going to trade. Usually, like I've seen most of the people, उनको focus रहता है which strategy they want to trade on. So the strategy becomes extremely important to them. But if you keep trading a particular strategy, okay, let's assume you don't make money. So then you start to imagine that so strategy से भी ज़्यादा important is position sizing and your psychology. So until these concepts are not cleared, okay, it's very difficult to make money via any strategy. Let it be like the best strategy or like even a bad strategy, you can make money with it provided you follow certain risk management principles and a good position sizing always. Now, how do we calculate the correct position sizing? The first step is to know what kind of capital you're trading with, and after that calculate approximately 1% of the capital. Now this is this kind of like position sizing method, it would work in 2022 beautifully, because even if you lose a percent in that time, okay, there were many weeks we lost that but still ended the week with 1% plus. So the markets that time, they were pretty forgiving. But now if you do this, think about it now. See, making 1% itself every week is very difficult in the current market. Can you afford to take a 1% loss right now? I don't think you can, okay? Because if you book the loss in 1 week, okay, even 1 day in a week, you're almost guaranteed like you cannot be making any profit that week, or you'll be ending cost to cost. Because for the majority of the people this year particularly, it's not as easy to make the profit as it was earlier. So like let's assume like we have a 10 lakh capital. For 1% of that capital is 10,000 rupees. That's our risk per trade, okay? And the stop loss amount is, for example, we're selling a 30 rupee option. Okay, the stop loss, let's say we keep it double. Okay, so now 30 point stop loss we have. What we are going to do, this risk per trade of 10,000 rupees, we'll be dividing it by 30 to the SL in points. I'll show you this via an Excel example as well. So whatever the answer that comes up to, that's the quantity you're going to take in the trade you take. Now I've brought you to an Excel file, and here I'm telling you, so which option you've sold, okay? I'll just, now the option, the selling price of the option here, for example, is 30 rupees I've taken. Stop loss, let's try to keep it double, okay? Like for example, because if 30 ka stop loss, if you try to keep it 120 or something, even if you win, the one time you lose, it will take away 3 wins of yours. So we can't give away too much. Ideally, the risk reward has to be higher than 1. But in option selling, even the 1:1 risk reward will do because the probability is higher of us winning. So see, the selling price of the option was 30. Let's assume 60 rupees is the price we get out of the option at any cost. Now the SL in points we got is 30 rupees. Now let's assume the capital we have is 10 lakh. Now the goal what we have, okay, like especially like when you're trying out new things, now we need like more number of trades to generate some data based on what we are good at and where we are making mistakes, okay? Usually it's not too smart if you risk like very high initially. So what we always recommend to people who come to us or people who ask us in DMs, we recommend them to take a 0.1% risk of their entire capital in each trade and take more number of trades. So that way they gain data as to where they are good at, where they're bad at. Now what I've done, I've taken this 10 lakh capital and I've taken the 0.1% of it. So you'll only be risking 1000 rupee each trade based on your capital. Correct? Now you can play around with these numbers. If you like feel 0.1 is very less, you can probably go to 0.25% and that will change your number here. Correct? But the idea is to lose very less, because let's always, I assume, like I'm going to go wrong 3, 4, 5, 6 multiple times in a row. So especially if I'm risking like 2% a trade, if I go wrong once, I'm down 20,000. Okay. If I go wrong 4 or 5 times in a row, I'll be down 20% of my capital. Now to rebound from that, okay, you need to make a lot more now. See, being into drawdowns, okay, like mentally very taxing for you. I've seen this even on the best of the best traders. Like once they hit drawdown, they're screwed. Like 3-4 months will go just to recoup that drawdown. And because, like see 2022, 2021, the markets were different. 2023 FI, they were different. So majority of the traders, unka FI 2023-24, the return will be most likely lower than it was earlier, which means market keeps changing and even the daily expiry has come. So whatever used to work earlier, there's a high chance it may not work in the future, which is why we always can go wrong, okay? In any thought of ours and any prediction of the strategy or the confidence, it may get shattered anytime. So always plan for the worst case, okay? Try to keep this number very low. So instead of risking 2% or 1% per trade, I would really advise you go for 0.1 or 0.2%. That way, even if you have a series of 3 losses, 4 losses in a row, you still are down like at only like 0.5% of your capital, which is very easy to recoup. Now, one golden rule you should follow right now is you're never going to lose more than 0.5% intraday. Okay, because now we are seeing like especially Sensex, Bankex, last week what happened, they were very brutal spikes. So assume you get trapped in a spike. Okay, I told you if you get trapped badly, you can't make money. So the idea is like even if you get trapped, you should not lose a lot. These intraday spikes, they become very scary right now. And I'll tell you like why you should not go into drawdowns. Okay, there's a PPT. I'll discuss that on the PPT. So like I want to discuss this one concept of drawdowns. Now, what are drawdowns? Drawdown recovery is the process by which an investment regains its previous peak value, and the recovery period is the time it takes for the investment to bounce back to its previous peak. Now, one very scary thing what happens if you are very open to the idea of taking losses always. See, if you lose 10% of your capital, okay, you need a 11% gain to get back to where you started, which means already if you lose, you need to work slightly harder to get back to where you were. Now, as the ferocity of you wanting to take losses and being okay with taking losses. Now let's assume you at one point of time get to 50% drawdown. What is going to happen? You don't need 50% to like recoup and get back to the all-time high. You need 100% return then. Okay, which means the more you lose, the harder it is going to be to come ahead. Which is why it's very critical, especially in current market, not to lose a lot. See some stocks, okay, now they've lost 80% of the value from their peak. Now, can they really get back to the top? Yeah, they can, but what's the probability? Because they now they need a 400% rise. And usually, even the stock investors, the decent ones and the proper ones, they expect around like 15, 20, 25% a year. So if you need a 400% return, most likely you've lost that bet and you're going to get screwed. The idea is not to lose too much. This is where position sizing comes into play. Now, if Yes Bank, okay, you invested your money in Yes Bank. Okay, let's assume all of it. And what if you like it and after it tanked down to get back to where you were now, Yes Bank has to deliver pretty high returns. Now that may be improbable. So I really want to drill this concept into you that if you keep losing and are open to lose a big amount always, you're going to get screwed. Now let's assume your capital is 1 lakh. Okay. Now to go up till 1.5 lakh, you need how much return? You need 50% return. Correct? But what if your capital comes down to 50,000? Then to get back to 1 lakh, you don't need a 50% return then, you need a 100% return. So it's very scary, okay, to lose a lot of money, it's very scary. So all these concepts of risk management, position sizing, journaling, all these concepts, they are very similar to each other and they go hand in hand. Like if you talk about position sizing, you have to talk about risk management. If you talk about risk management, the importance, you need to know about drawdowns. And if you want to solve all these, you need to do your journaling. So you have to do all of them together and couple them. Because if you don't, then it's impossible to make money, I would say. And the more you do this, okay, the higher the probability of you making money. You have to put a lot of efforts to become. What me and Nikita do every weekend, okay, we go over like what trades we took in the week and then we try to calculate where we took the risk. Like if we didn't make money in that week, we discuss like where did we go wrong technically? Why didn't we make money? Did we risk a lot? If we do risk in some setups and they don't work, we reduce the risk drastically. So what should your process be? Okay, if you want to improve in your trading, with respect to position sizing, what should you do? First thing you need to do is determine the number of lots you can trade first. Okay. So in Bank Nifty particularly, now with the margins have changed. So on 10 lakhs, the number of lots you can sell is 10 lots. Okay. So every 10 lakh, you can sell 150 quantity right now. Right. And the idea is to know the maximum we can do is 10 lots. So to do 10 lots, you should deserve to get to 10 lots. Okay. You should not be doing it just because you have the money. So what one mentor of mine did, okay, his name is Patik Patel. So that time when we were trading, the maximum we could do is 6 lots that time. So he started me off, okay, with 2 lots. 2 lots, say I would do Nifty. That's what I did. And when we started winning on 2 lots, automatically we get, like, I started to gain confidence on him as well as the system he was making me trade on. So after 2, I went to 4 once I started winning. Okay, and then finally I was doing pretty good. So then I moved on to 6 lots. That was the maximum. Now currently you can sell 10 lots, right? So what you can do, you can follow the same process. So trade with 1/3 quantity right now. Instead of 10 lots, try trading with 3 lots. Okay, see what like you do with 3 lots, 30% of a position sizing, and don't increase your quantity. At least, like, keep some targets for yourself. Like if I make 1% of my capital with 30% quantity, then I'll probably increase it. So keep such goals and targets for yourself and then move ahead. It's a very slow process, but it's guaranteed to work. Slow is good actually, because like most people, they lose in trading because the first year or second year itself, they want to be making 100% returns. Or they have their, I want this 1% per week, every week, right from the beginning. So it's not a healthy way, okay, to grow in trading. You have to go slow. And if you are okay with going slow, there's a very high chance, okay, you become a very good trader. So what you can do after trading with 3 lots, you can move on to 6 lots. Finally, then you can trade with 10 lots. That's how you want to be increasing your quantity slowly. It's a gradual process. So that was it from this video. It was a very short concept I wanted to discuss on, but it's one of the most important things you will come across. So make that Excel file, which I made in front of you. Okay. It's very, very simple to do that. Make an Excel file, decide what position sizing you want to be doing it with, and calculate your risk per trade and per day, and then move forward. Okay, I hope this video is some sort of a decent tool for you to at least get started with, like, learning the risk management, position sizing, and all these sort of concepts. Okay, so drop down your questions below this video. I'll happily be answering all of them in a new video. And we are planning to do a Q&A as well. So most probably I'll be doing a community post saying the questions you want to ask us, and then we'll cover them in a video next week. And also next week, I'll be showing you my entire year's profit and loss statement. So hit the like button in this video and keep the notification bells on to know how much I made from trading this year, and keep commenting which topics you guys want more videos on. We'll be happy to cover them. So cool. Thank you so much for watching this video. We'll meet you in another video very soon. And again, wish you a very happy Holi. Bye-bye.